still believe that there's some downside here. You may think I'm crazy, but we did have a full moon over the weekend, so I have a few reversal candidates. I'm a little conflicted on euro pound. I'd like to sell it higher. So I'm not sure which would be the better preferred short, the guppy or the euro yen. So what you do is maybe you put a little on in each and not a full position in case this takes time. Maybe a turn around Tuesday in case there's one more stop hunt above these highs, but have your toe in the water. Because I don't know about you guys, a lot of things happen overnight for me. And if I don't have at least partial on, I miss a lot of things because then it gets away from me. Maybe the turn was in London before I got up. But these candidates look pretty good, and there's some confluence here. When you look at what Nick is saying here, and I recommend everyone go to our YouTube page. You have two excellent looks at the week ahead, one by Steve, one by Nick. They're both really complete coverage, about 15 minutes long. So here's Nick's look on the guppy, kind of looking for potentially the same thing. She's thinking 45, maybe 44. And Grega has kind of the same view. So here's a freebie for you. So he was thinking high up here. His C wave is even deeper, but in ABC here in the guppy. Give me a Y. How are you, Diego Moro? Thank you for calling me coach. Yes, sir. I consider it humbles me, and it's an honor to be called a coach. You know, all my teammates call me coach, and they don't even need any coaching. And many of you don't either. But I will share what I know every day with everyone in our community. So everyone with me on what I'm seeing in guppy and euro? Give me a Y if you are. Oh, thank you, Jacques. And I just want to bring up the yen here. Part of the reason, I know that there's, 118 is a possible long-term target. Nick's been bullish the yen from all the way down here, right here. But she thinks that it's going to be tough sledding between here and 115. And her alternate count is if it doesn't go to 115, that this could just be an A, B, C. And we'll see as long as it doesn't start closing back above this 115 level. But it's right at major resistance right now. Shorter term, I have divergence on multiple time frames, barely on the 4 hour. But on the 1 hour, it's a little bit glaring. So we could get one more push up here. This could be one, this could be two, and maybe we get a three and it holds, the yen crosses up for a little while. But I wouldn't be long the yen up here anymore. At the minimum, I'd be looking to buy a break if I'm bullish, back down towards 1380, maybe even 113. Everyone with me on that? And the euro pound, I'm a little conflicted as to whether it's topped or it's going to break out. The daily has me waiting for one more high to attempt maybe a 3 drive. Steve showed it last week. Up here, maybe take out, here's 1, here's 2, maybe we get one more push up. Thank you, Craig. Okay. So I wonder if Blake's in the room today. I missed his voice. He is in the house.
I'm here.
Welcome back, partner.
Hey, it's nice to be back. How you doing?
Good. I hope you had a good time.
Had a great time.
Nice. That's where Gordon Gecko vacations, I think.
It's wild, as I've never been to Long Island and up in New York, and I you hear about it especially, traders, everybody in the markets, they go to the Hamptons and,
Yeah.
and, being from the West Coast, we vacation in La Jolla,
Yeah.
Carlsbad, like we're in your neck of the woods. It's it's like, it's too much of a hassle to make it all the way out to the Hamptons.
Yeah. I was there once. It's beautiful.
It's gorgeous. I have to admit that, that after being there, I can really understand the draw and why people go. It's gorgeous. The weather this time of year is phenomenal. It's a bit of a pain to get in and out of. It's kind of like the La Jolla situation is,
Right.
one way in, one way out type of thing. So you kind of got to time it correctly on trying to exit the place. But it is really, or choppers are 10 grand. To get you in and out from Manhattan, and there's plenty of people that do that. But that's the price, Steve. Yeah, it's a $10,000 ride from the city. This I found out. But it was beautiful country. It's again, being from the West Coast, you don't really. The West Coast of the United States, and obviously, if you're in different parts of the world, you probably think the same thing. You think that New York is a very, oh my God, the stock market's really coming under pressure. You would think that that it's a really small area, but it's really vast. I mean, it's gorgeous. I really enjoyed my time there. It was really nice, and on top of
the difference between you and the hedgies, Blake, is you're a worker bee. So you came back, and most of the hedgy guys, they don't come back until after Labor Day. Yeah, they're in their second home up there. They're not going back to the street until Labor Day.
Yeah, it's wild. It's all Wall Street money. That's all it is. It's like 90% of it. It's
let's take some of that away from them and put it in our pockets.
That's what I'm doing here today. That's what I'm trying to accomplish. So, I thought I'd spend a little bit of time just getting my head back around, wrapped around the market. Here, let me pull up the charts really quick. I'm actually still long some US dollar Mexican peso. I sold some last week at 1835. So I exited a good chunk of it. Nice. Up here. I added a little bit down as we retested this wedge. So if you can see the wedge here, I added a little bit back this morning at 1795. So, I like the US dollar Mexican peso, especially if the market is a little risk off here. I mean, I was just talking about the S&P. If you look at the S&P is, coming under a little bit of pressure. Now this is what's really key about the S&P here, and let me get rid of some of this stuff. This is
that line in the sand at 2,400. How about it?
Well, this is this I had drawn out from last week. So if you actually take the daily, okay, and you take the spike low, this is Thanksgiving.
That's the election.
The election night low, then this spike low, and what we're doing is we broke that last week. We broke that trend line. We came back up and we retested it. So as long as the S&P stays, relatively heavy here, and I'm sure, and you guys know as well as I do, as soon as the stock market opens here in the next half an hour, they're probably going to ramp it back up on the S&Ps. They're going to try to push back on some of this weakness. But as long as we stay below like today's highs, something like right around there, you got to think, we might be in some risk off here in the next, a couple of days. So I think as long as we stay below here, I don't mind playing, the US dollar Mexican peso long. There's a few things that you can probably do. I know you guys are talking about the pound yen, which I haven't really taken a good look at, but the pound yen, is obviously very divergent on this way up here, and there's very manageable risk if you want to be on the short side. I mean, that it's you guys know where your line in the sand is. I mean, it gets above 149 and you have to be out. But good risk reward on the short side here. The euro yen's had a 1,500 pip move since pre-French elections. We're at a big confluence up here. The euro yen, I'd like to see how it acts up at these prices. And you know, I think one of the biggest things to me is the euro dollar and where we've stopped. So everybody that listens here, and I know a lot of people see it now, but we've seen it for the last several months. Okay, so this isn't like anything that's new to you guys. We've seen this channel that's been in play, and even before we even got up there, when we were like this at like 110, we're like, okay, yeah, we can rally to 114 pretty easily. And so here we are, 114, 114.50. And notice how we're struggling here. I mean, the dollar, you know, I keep trying to, you know, wrangle in my mind, okay, why would the dollar rally? Like, I don't know. I don't have a good argument of why the dollar would rally. I mean, you could say, well, rates are going up, and you know, because rates are going up, you know, the dollar is going to rally. But you know, everybody else is starting to tighten too. That's why, you know, bond yields are rallying across the board worldwide. And you got you know, bunds, you got bonds that are dropping. You know, here's the bond market. There's a 10-year. You know, you got the, you know, boons. The boons are, you know, under pressure. So, you know, yields are going up everywhere. So really, I have a hard time, you know, with that argument. Oh, the dollar's rallying because, you know, the Fed's tightening. Everybody else is going to be tightening somewhat, with whether it's rhetoric or physically, you know, raising rates. But I know that the euro dollar is up against key resistance, and I think, you know, as long as we stay below this 114.50, you got to start thinking that the dollar might, even if it's just a tactical bounce, meaning that, you know, the dollar longevity may not be for a rally, but maybe it does just rally temporarily, because I think ultimately the dollar is still going to go lower. In other words, I think the euro dollar is going to eventually break higher. But, you know, looking at the charts technically, I think that, you know, we have a good chance of doing something like this first, then rallying, you know. But the, you know, the fact of the matter is, we know we're wrong above here. This is where, you know, you have to really just kind of say, all right, well, screw it. You know, the dollar is going to get destroyed here, and we don't, you know, and the euro is going to rally and everything else. But the charts right now are telling us that, you know, the market is hesitant. I don't really want to get too bearish the euro while we're trading above 113. But if we trade below 113, I think that gives us a shot to move back down towards, you know, 111, 110 maybe. But you can see we're trapped here. I mean, this is a pretty you know, good range for right now. This is a pretty good range, and you know, I don't have the argument of why the dollar is going to break to the upside or the euro is going to break down. I don't know. You know, I don't know that answer. I just, all I know is that, you know, if the euro does break below 113, the dollar is probably going to get a little bit of a lift, a little bit of a recovery rally. And it makes sense too. I mean, if you look at the dollar index has been beaten down, you know, with the ugly stick. And you know, maybe we do have a little bit of a lift here before we reverse again. It's hard to say, and I don't want to be, you know, I don't want to be aggressive in thinking that's what's going to happen, because I again, I don't have the argument to back my decision. Like if I wanted to you know, be long the dollar, I don't have that great argument that I like to have from a fundamental standpoint on why things are going up. Okay, yields are going up, great. You know, okay, well, that's, I mean, I guess that's kind of an argument, but you know, anything else, I'm really not too sure. The other thing
between the euro USD short, pound USD short, and the yen crosses, which do you think is a higher probability trade? Which makes more sense? Just to be long the dollar and short the euro and cable and other currencies?
You know, I don't know that, but I look at the dollar yen, and the dollar yen's had a really, you know, nice move. And I mean, this is a very bullish break here in the dollar yen. And obviously the dollar looks strong against the yen, not so much against everything else. And I guess the question is, if we're due for a period of risk aversion, will these yen pairs move lower? Will the dollar yen, move down? Will the yen, euro yen, pound yen, Aussie yen, Kiwi yen, will all those come under a little bit of pressure should that happen? And I think the answer is yes, but we haven't seen it yet. I mean, we haven't seen the yen strengthen, and so it's a little concerning to me that the yen hasn't gotten any traction thus far.
You'll need a bond pop. I mean, it still is possible that there's some type of bond pop after this big break. So that would most likely, now everyone's bearish bonds again. Okay, so remember, everyone was bullish when I think Adam said the Chinese were buying bonds, and I said to Adam, if they're publicizing they're buying bonds, it's almost over because they're distributing. And but it's been a pretty healthy break. We could get a bounce in treasuries, and the yen pull back maybe to your breakout level.
Yeah, I mean, it's entirely, it definitely is possible. I just don't.
Yeah.
I haven't seen any evidence of it yet. I mean, and trying to anticipate the moves. I mean, that's what we try to do all the time. But we're going to have to see maybe gold firm up, and silver and those precious metals. I mean, they're looking actually a little bit better at the moment, but there's still a lot of day left in today. So, I look at gold and silver, and they're really trading heavy. I mean, look at silver. That's a disgusting
You missed
move.
a few flash crashes, man.
Yeah. So what happened? It looks like on Thursday or on Friday, the silver market really. I mean,
there was a story on Reuters that Volge was short, looking for 1550. So he panicked the market. You panicked the market, buddy.
Steve, are you short some precious metals here?
He booked them.
I was short silver since 1650 because of the bear flag there, which was quite clean, and I actually hit my target during the flash crash. So I'm now not involved at all. I had a target at 1550 because that was the bear flag target. So that got hit like that night during Asian hours.
Oh yeah, I mean,
although it would have been hit, as you see, like some hours later, because we ended up anyhow moving there, aside the flash crash.
Right.
Yeah, but
that's pretty amazing. So when that flash crash happened, and obviously I wasn't watching. I saw it happen. Mobile wise, I looked at the charts, but it looked like we weren't down there for more than just a few minutes.
Yeah, it was.
No. It was less than 20 seconds, Blake.
Wow.
It was an 11% plunge, if I remember right, that lasted around 20 seconds.
Come on, guys. Wow. This is your usual supply and demand price move, isn't it?
Yeah, this is normal. Completely normal. Hey,
very normal. Very normal. So, everybody wants to sell half a billion.
Stelios wanted to buy it at silver. 14, but he was, I think, changing the diaper. He was changing the diaper or something and missed it.
Well, are you guys still there?
Yeah.
Yes.
We're all here.
100%.
Okay. Sorry, I lost your voice there for a second. Well, so the only really, I mean, there's some news at the end of the week. We have retail sales and CPI here in the U.S., and we have some inflation data with CPI and PPI at the end of the week. But we have the Bank of Canada on Wednesday, and I'm wondering, how happy the BOC is going to be with the strengthening Canadian dollar. The Canadian dollar has strengthened quite a bit in a very short period of time. I'm wondering how copacetic they are with this move.
The question is how comfortable they are with the unprecedented housing bubble they have at the moment. Something tells me that besides using macroprudential tools, a little bit of Canadian dollar strengthening is going to help, tame that as well. So don't be 100% sure that they're not liking it, Blake.
Yeah, I don't know how they're going to react here, but I can't see any reason like technically to reverse what we see in the Canadian dollar either. The Canadian dollar looks, I mean, the dollar Canadian looks extremely weak. I would be more of an advocate of selling any type of rally that we got this week. So if we get a rally like this,
that's what Nick did on her video.
Oh, really? Okay, that she was thinking the same thing. I think that's more of a realistic expectation of what to do this week with the
Blake, I think that every single one of us has the same opinion about it. I remember talking here a long time ago and seeing with Dale and saying that, listen, all this price action that has taken place since we found a low back in, what was it, April, I think, in USD CAD, the price action, the corrective price action that followed is corrective simply because look at how choppy in nature it was. Amazing overlaps, one after the other, one after the other, one after the other. I mean, this is extremely characteristic for a corrective price action. On the other hand, when we found a high, look at this. Every single time we consolidate, we just plunge to the next level lower, and then we plunge to the next level lower, and then we plunge to the next level lower. I think it's I know that Greg sees it like that from an Elliott wave perspective, and I'm also using that as a guide. And but from basic technical analysis as well, I think that we really need to sell rallies in USD CAD. So Nick said the same yesterday in her video. So I think that we are all aligned with that. I mean, this is what the price action is telling us here.
Yeah, it makes a lot of sense to me. And the other thing that I'm looking at is I'm really just kind of keeping my eye on the Kiwi. The Kiwi's had a pretty big rejection up here, and I know you were bearish last week, Steve. But we haven't, the Kiwi hasn't done anything. But what we are doing is we're consolidating pretty tight here, and I think that a move in the Kiwi below this like 72.50 or so, I'm going to start looking at shorting the Kiwi across the board. So that whether it's long Euro New Zealand, short New Zealand Canadian, New Zealand yen, doing things like that. I might trade some more of the exotics with the Kiwi dollar if it starts breaking lower. But I do want to keep an eye on it. I think the Kiwi is on the cusp of a big move. And maybe it's higher. Maybe the Kiwi actually breaks higher.
But it has to happen soon, Blake, because as you very well said, I said it on Friday pre-NFPs. I pulled that short also from the market by taking like just 47 pips profit because. I was looking at the technical picture on the ascending wedge and the resistance you have marked there from the descending trend line and everything else. And I really believe that we're going to get a rejection, and we get the initial rejection, which, made me happy because, that was a great short. I mean, having to do with the reward to risk ratio. But then look at how many failures we've had intraday. Look at all those lower wicks. I mean, this is not inspiring price action for something
it smacks more of distribution to me.
Yes, exactly.
More than consolidation. I mean, you never know, but when you start to get those divergences, to me, both divergence and distribution start with it. And so does my name, Dale. I just realized that. How about that?
So,
good thing it didn't take you many years, Coach. Huh?
Only 65, buddy. All right.
Oh, well, who counts?
So with all that being said, I'm going to get ready for the open, but I want to remind everybody that the end of this month and the beginning of August. So I think we're doing this as of July 31st. Right, July 31st. We're going to start broadcasting an hour earlier, and it's going to be, this way we'll catch, some of the economic data releases. I think it'll be a better time for everybody. So I'm going to watch the open today. I think equities are going to try to recover a little bit, but I'm going to look to sell some risk, on a rally this morning if we can get a little bit of push higher in equities. I mean, you look at like, the S&P futures, Dow futures, they're down a little bit, but I'd like to see them pop and then use that as an opportunity to sell into strength. And so that's what I'm going to be doing today. So, and that's what I'm looking at. That's what I'm looking at moving forward.
Blake, I tweeted out that it's, great to have you back again, and that when you're away, it's like the F in face is missing. And the F equals formidable. So great to have you back in the saddle, buddy.
Oh, thanks, man. It's nice to be back.
Okay, bro. So I know Steve, who's kind of quiet, probably has a few things to say about what's happening today.
Oh, sure.
Steve, can you overcome your shyness today about talking markets with our community?
I've never been accused of that before, by the way.
Yeah,
being shy.
That makes two of us.
Yeah. Which is probably a good thing, right?
You still with the guppy short?
Oh yes, definitely.
Mm-hmm.
And we can have a look at it. I mean, I like it as a position. The risk reward is actually good, and these were the scenarios we had last week.
Yeah.
We got a test of this zone. We didn't penetrate higher. Today we're getting another rejection from the same zone. Now, of course, none of that means that we're going to stop here. We might easily be in a consolidation that's going to yield one more high. So I can even expect that. So we might see something like this again. But I'm pretty convinced that we are at a very, very, very mature phase of this move higher that started from finding a support at the confluence of the 200 DMA and the ascending triangle trend line.
Yeah, 4450 could end up being some kind of magnet. That pivot, it's a next pivot.
I totally agree with you. That's the first zone that I would expect to see some kind of a reaction as long as we get the downside started, of course. So right. Yes, this is a first zone of interest. There's no question about it. And if that gives way, then another retest of the ascending triangle we'll start looking as a possibility. But of course, one thing at a time. We still need to see a true a reversal. Friday's candle, which was a shooting star, is a good indication. Today so far we're getting an inside candle, which is okay. It's fine. But we will have to see. We will need to see a move lower, and we'll need to see that fast. Otherwise, the scenario of one more thrust higher.
Today, I'd like to see close under Thursday's close. Would be the first indication of something. I
totally agree with you.
Yeah,
I totally agree with you. This is an important level here. It's 146 actually. So a close below 146, I think, is going to confirm that the correction lower has begun. So that's the ultimate proof of this whole idea working.
Someone was asking while Blake was analyzing Euro about it struggling in that area. Make what you would think of the Swiss. I don't know.
I'll tell you, and I'll repeat something I said last week. By the way, I just wanted not to forget to mention the following. You were talking about the USD yen before.
Yeah.
And this is a 4-hour chart of the USD yen, and this is what I'm seeing. So
rising wedge.
Yes, correct. So I maintain my bullish bias for USD yen, but I obviously think that this is a zone that's dangerous for somebody to establish fresh longs. One reason is obviously the ascending wedge. Another reason is that we have just above us the highs that we saw in May. So, Blake just said that he might expect some risk of coming. So, as you understand, any catalyst that will bring USD yen lower to break this wedge has a good possibility of then getting it all the way down to retest this zone that I've talked about its importance plenty of time, this 111.60 to 112 zone, before we get another resumption higher. So a scenario like this is not unlikely at all, you know, to first get a break below here, a retest, and then.
And you were constructive. You were constructive the end for quite a while. So was Greg. So was Nick near the lows. One thing, take a look at Nick's work on her. If you saw the review today, that although she was looking, 115's been her long-term goal. I mean, we're not that far away from that. And then we could see 118, but her alternate view is that this could be a C wave.
Yeah, I totally understand what she means. Yeah, she obviously means that perhaps this is this is the move. In which case, if we want to check for equality, we should still see new highs in comparison to this high, which would also probably fit quite well with my idea, because that's what I was always looking at, that an important zone after we broke this zone, the 111.60-112, was the 115.50 to 116 zone. And I pretty much bet that if we
talks
do
about
a fib extension, if we make a fib extension, yes, that's why she talks about 115. You say the equality of these two legs comes at 115.04, 039 to be exact.
Yeah.
But personally, I like this zone a lot. So I would probably give it a little bit more, like another 50 to 100 pips. Don't forget, regardless, that equality targets, etc., are tools we use to get indications. I mean, this is not measuring an industrial production material or whatever with millimeters. I mean, you just get a rough ideas of which levels are levels of interest and importance. So yeah, I would definitely see a retest of this zone before lower. So if this ascending wedge that we saw on the 4-hour chart is of significance, we might see a move lower from here, a retest, and then perhaps another move to test this zone, and we see what happens from there. Otherwise, if this ascending wedge does not work on the 4-hour chart and we move straight higher from here, I would be really interested to try out shorts in this area for a move lower. Okay. So this is these are the two options I see from current levels in the USD yen. We either fail right here, almost right now, for a retest of the 112 zone, or we penetrate higher, in which case I believe we will get to see the 115.50 before the pullback.
Sounds good.
Okay, a friend here is asking about the Nikkei. So since we were talking about the USD yen, it's not a bad idea to have a look at the Nikkei, since we know very well how much correlated these two are. So let's have a look at it. Okay, this is what I see with the Nikkei. First of all,
another wedge.
Yeah, exactly. We have another wedge.
Maybe an ending diagonal.
Maybe, yes, maybe, very likely actually. Somebody could even say that, there is I mean, it depends on from where you see the structure here, but there is a possibility for an ending diagonal, for sure. But I would have to say the following here. It's more than obvious that we are moving higher, but momentum has waned here. Okay, I mean, we can see that by the overlapping nature of this ascent, which is also what characterizes wedges. Of course, somebody could even claim that, this is what happened. So, for example, somebody can even check a scenario that is similar to what Blake just saw with the SPX. So perhaps this was a breakdown and we're currently retesting it. And this might be the case if we see a failure from these exact levels. But if we don't, then this looks likely to me, and this coincides also with a view that perhaps we get a test over the 115.50. This looks even more likely to produce something like that.
One more high. Yeah.
Yes, and then a failure. Okay, because this wedge does not look mature enough. I mean, it hasn't tightened enough, perhaps. So the scenarios here are the same two we saw with the USD yen. We either get a
line. How about a line off the November low and the April low to see where it comes in?
November low and the April low. Sure.
Then
Let's do a magnet. Let's put another color so we can distinguish it, and let's go.
Because I'm sure that's one a lot of people are going to look at, Steve. All right.
Okay, there we go. There's your line.
Okay. Now it really looks like a wedge. But it could have one more pop, clean out the shorts one more time.
Yes, somebody can definitely see.
The S&Ps could do that too.
Look at this. Somebody can definitely see a bigger wedge here, and this bigger wedge could be this one. So an alternate wedge is the one you suggested. I mean, support being the support line being this one, and the resistance line is connecting these ones. Actually, this is not very
nice on the fly. Nice on the fly technical work. Yeah.
So you see, we have perhaps a wedge within a wedge here. I mean, in the bigger picture. So if that's the case, then any test of 20,400 to 20,500, any rejection from these levels is definitely then going to provide, if we get another pop, of course, is definitely then going to provide a move lower to at least test this one, and then if we get a break below that, we can then see another move to test this area, because this is an area of interest if we go back on the chart. And you take it from there. For example, these are the levels to watch. I mean, you already have the levels marked here. Let me zoom out, and this is what you can be watching. Okay. So you have wedge, you have a wedge, you have an area, you have another area, you have this wedge support. But for sure, if we break the blue wedge support, which is a bigger one, that will probably indicate that a move lower is going to be much deeper than just retesting the 19,000 area. So I think it was interesting seeing the Nikkei as well, because as you see. And this, goes well with my bias. Another move higher to test that zone in the USD yen is quite a likely scenario before we actually see a bigger corrective move longer. So let's see what happens. We will know which of the two scenarios will play out rather soon, perhaps even today, actually, because if we get a break higher in USD yen than the previous high that we got here at 114.30, 35, whatever it is. Same with an Nikkei, then we know that we're looking for the second scenario, which is quite likely. So thanks for the question.
Aussie, Euro, Kilo.
And we already need to cover the USD Swiss question.
Oh yeah.
But before we do that, let me come back to a pair that I've shown more than once. I'm showing it like once every 10 days. No, this one, the Euro Swiss. Do you remember last week I said again that this is the pair that will indicate to us if we want to be long the Euro USD or short the USD CHF, or the opposite, in case we want to commit to one of those. And for me, this break higher from this channel that we've been respecting since the beginning of 2016 is quite significant. And this tells me that we've entered now officially a period of the euro outperforming the Swiss, and I totally understand why, because plenty of the risks surrounding the euro area have been significantly reduced lately. So that tells me that if you want to be long, if you're looking to be short the USD, and you're just wondering if you want to do that against the euro or the Swissy, it means that if you want to be short the USD, you would rather do that against the euro, because now the euro is looking to outperform the Swissy. Oppositely, if for some reason you want to be long the USD dollar against the euro or the Swissy, you obviously want to do that now against the Swissy. So now we can go ahead and have a look at the USD Swissy and see what we get there. And you'll see that what I'm seeing here is this. First of all, we found a low at the exact level that we found a low during that whipsaw move in November in the US elections. And that's an important rejection from here. Secondly, what we see here is something like a descending wedge as well. And we're currently testing, I would say, like 9680, 0.9680 is a significant level. We had a low here as well. Generally, this area, let me mark it. I think this is an area of interest. This area, there it is. This is an area of interest. I think that a daily close above this area is likely to bring on the next move that's going to be up there. Okay. So obviously, USD CHF is looking very likely to outperform the Euro USD, having to do with its downside, because obviously they're inversely correlated, because one of them has US dollar to to one side and the other one to the other. One of it has as a main currency and the other one as a funding currency. So if you're looking to be short the Euro USD from current levels because of what Blake just saw before, and let's have a look at it again, which is like a short-term rejection from this descending channel and the general area of 114, you might actually want to reconsider and prefer, instead of a break of that wedge I showed you on the USD CHF, to be long that one, simply because of what we see in the Euro Swiss. Okay, so if you really believe in this Euro USD setup, you'd rather use it as a signal to get you long the USD CHF. That's my opinion. Between the two of them, I'd rather be long the other one. And as I said, Euro Swiss shows why, very clearly shows why. That technical break is important, and there is a reason for that technical break. There is a fundamental reason that we've seen that break. Okay. Okay, so that covered this as well. Now, having to do with the USD CAD, because friends are asking, despite Blake having covered it.
Well, someone's asking about pound Aussie and Euro Kiwi.
Euro, Kiwi, and pound Aussie. Okay, then let's take them in order. Let's have a look at the Euro Aussie. Not much change since we saw it on Friday. On Friday, I said it reached it reached my first target. It showed a rejection from there, and that's exactly what we expected from here. If you see, I haven't changed the drawing. I expected a move lower. We got that. I expected the support from these levels. We got that. And then I expected the rebound to at least test this one. We got that. Now, what happens from here is the following. If we hold 149...
Si, senor.
If we hold 149.50, there is a chance that we're going for new highs, a good chance that we're going for new highs. If we don't hold 149.50, the picture gets more mixed. Having to do with Euro Kiwi, which was the initial question, I still expect that we should probably test this zone. So for me, even if that's a corrective move higher, this was like a huge key reversal. Then we had a triangular consolidation, and logic says that that should produce at least one thrust higher. In theory, we've seen that because we incrementally registered a new high 2 days ago, but most likely that's not enough. So I'm still of the opinion that a test of 158 is more likely than not. So that covers the Euro Kiwi as well. And now we can look at the two popular pound crosses, which is the pound Aussie and the pound Kiwi. Pound Aussie, as I said on Friday, this zone marked since a long time ago, and the strong rejection we got out of it is worrying. It's really worrying because we completed the inverted head and shoulders target. We found this zone, and this provided like a huge rejection. So I would be very cautious the current pair at the moment. I mean, if I was long all the crosses of euro and pound against the commodity currencies, and I had to reduce my risk at the moment, I would start by cutting out this pair. Okay, pound Kiwi now. Huge day again, and we're currently back testing these highs, these lows. We are in a general area of interest and the 200 EMA. So this can easily end up being a double top. So this needs caution as well. But on the other hand, we might find support exactly where we are at the moment. So I would suggest being cautious here, but not be alarmed yet. So that's what I see about pound Kiwi. On the other hand, pound CAD, let's see this one as well. We saw it on Friday. I said that I would like to see another move lower here before a bigger rebound higher, and perhaps then another move to retest this huge zone. Okay, so I would still remain rather bearish this one. USD CAD we were about to look at. Yes, USD CAD. Okay. Let me zoom out. This is what we were talking before. We got, after a huge rally, we got an impulsive move lower, and then we definitely got a corrective move higher. The overlapping nature is telling. And what did we get now? After breaking below this ascending trend line, I think that we confirmed that this move lower is impulsive. This move lower, on the other hand, cannot go forever. So at some point, we will need to see a stronger rebound. So which area can produce that? The next area of interest is this one, in my opinion, 128. But no matter from where we rebound, the first level I would be looking at is 130. Okay, so 130 for me is a critical level in case of a rebound. I'm not saying that if we move above 130, I would turn bullish the pair, because then we have other areas of interest that even if those create a rejection, we would still maintain our bearish bias. But definitely 130 is the first significant area that can create a rejection after we start seeing a rebound. But we're not there yet. I mean, today we made an attempt to rebound, and we've already given back most of the gains of the day. We started up with a strong candle in an effort to retrace much of the losses we saw after the Canadian jobs data on Friday, and we've already gave back most of the gains. So there's nothing yet that says, okay, this is a bottom. So I'll insist. I would be more inclined to believe that we will test 128 before actually moving higher. Anyhow, trying to catch a falling knife is not an easy job to do. And since I strongly believe that this is an impulsive move lower, if you're not involved with it, you would rather wait for a rebound to get aligned with the proper side, which is the downside. So that's my 50 cents here.
Thank you, Steve.
By the way, Dale, do we have a guest today?
We do. We have an excellent guest. Have you ever heard of the Concord technical method?
No, actually, I haven't.
Okay, so
Tell me about it.
It's going to be unveiled. It'll be my first time too, but our guest is Patricio Coronel. Mm-hmm. His Twitter handle is @PatoNet. And I just saw some of his tweets, I don't know, a month or so ago, and it looked interesting. And he said that he trades from Mexico, and he says Latin Americans are familiar with this indicator, but most people in Europe and the US aren't. So we're going to have our eyes open to something new. So it should be a great.
Heard of it.
I could show you.
Yeah, sure. I mean, it's interesting to see something new.
Let's see, because he tweeted out examples of it, so I could kind of show you a little bit. That doesn't really.
Sure. I mean,
show.
Definitely. I'm really curious to see what kind of thing that is.
Yeah. I look. You find a lot of good talent. Like, say, for example, you don't have 50,000 followers. You're not famous. Like I said, your work should be. But you find diamonds in the rough that people just, don't know about yet. So let's see. That doesn't really show it either. Let's see. Okay, here. So
by the way, I have to say, since we mentioned before, USDMXN, I'm totally with Blake. I mean, I see the same thing he sees. It's a do or die level here. So it's, a retest of the wedge. We either rebound from here to keep, the bullish thesis alive, or, that's a failed attempt. We also have supported the RSI. So those of you tracking the USDMXN, this is the place that, will tell us, if the reversal thesis is right or wrong. I think you got the screen, Dale, so show us.
Yeah, I wanted to show what Patrice was going to be talking about. So Concord, I don't want to, steal the whole interview, but what's interesting to me is weak hands, strong hands, institutional, retail, and, different, he said 6 indicators. Anyway, so this is what we're going to be seeing.
4 for trend and 2 for volume. It's
yeah.
representation based on areas of color and not on simple lines.
Yeah.
Also implies a certain novelty in the design of stock market indicators. The brown trend and green and blue areas volume. Okay. Interesting.
He's actually in the house, and there's no law if you're finished.
Oh, definitely.
For us to get started on the interview.
Absolutely. Go ahead.
What I'm going to do is I'm going to make Patricio the presenter now, and instead.
Okay, enjoy the interview. I'm gonna be here listening in. Actually, I'm really curious to see how this works.
Okay. Well, I think I found a diamond in the rough. So, Patricio, Cornell, I'm looking forward to hearing your voice and seeing your screen. You're now the presenter.
Hello, my friend. Hello, Dale.
Hello, Patricio. How are you?
Hello, everyone. Yes, thank you very much for your invitation. I'm fine here, waiting to show you an amazing tool.
Okay. Well, I'm waiting. There is a screen share function on there that'll give you a selection for you to show the screen.
Okay. You want to start right now?
Well, yeah, we could start now, and I hear you. So if you share your screen, we'll be able to go through your presentation.
Okay, let me just 1 minute, please.
So there's a drop down up there to share your screen, or it just says it on the sign because I made you a presenter. There we go. There we go. So, Patricio, I have a few questions for you before we get started. We can see your screen now?
Yes, thank you. Thank you very much.
Okay, where in Mexico do you trade from?
Well, I am not from Mexico. I am from Ecuador.
Oh, okay, so you're in Ecuador.
Yes,
I assumed it because you quoted the webinar, told your followers the webinar in Mexico time, so I assume you have a lot of contacts and followers in Mexico.
Yes, I belong to TRMX. This is the large Mexican and Latin American community trading.
Okay.
So I am with them. We organize free financial and trading webinars on Spanish. Usually 2 per month. So I interact a lot with them, with the Mexican traders, but I am from Ecuador.
Okay. Well, thank you so much. I also wanted to ask you, why you adopted a duck in kind of like a war helmet as your animal spirit, as your icon. It kind of looks like Donald Duck to me a little bit, but why the duck? Why the duck, Patricio?
Why the duck? Because my name is Patricio, and the short name or a nickname for Patricio is Pato, and Pato on English is duck.
Okay.
So I like Daffy Duck, so that's my
and you probably being a trader have learned how to duck.
Yes.
So why don't we take it back to how you got started in the industry and who your influences were, and how you ended up being where you're at today, going back to the beginning of your journey. How did it start for you?
Well, I have 10 years experience of trading. I began with different kind of tools, different trading platforms. Right now, I use eSignal. I will show you live later.
Okay. What were you doing? What were you doing before you got into the business?
I have a businessman. I have many business here.
Okay.
I also have some real property business.
Okay,
also.
real estate. Okay.
Yes, real estate.
Okay.
But I love trading, and I always trade every day. I am doing scalping.
Yes.
I trade mainly. I focus on mini S&P futures and crude oil futures.
How long? This is another standard question, because I'm interested, because I think a lot of people have unrealistic expectations of how long it takes to become effective and profitable in the markets. How many years did it take you, would you say, before you felt like, you had an epiphany and you had a new paradigm where trading just became second nature to you and doesn't work all the time, but works more than it doesn't? How many years?
For my 10 years, I am 3 years profitable on scalping. Scalping is the hardest way to earn money here on this industry.
Okay.
So I love scalping, but it's a large and hard work.
You're right. There is no secret. The secret is hard work and persistence, right?
Yes. Hard work.
Okay, no matter what indicator or method, whether it's Elliott, harmonics, or Concord, whatever the method is, it still is hard work.
I always trade every day. This business is like an airplane pilot. If you have a lot of hours of practice or facing the markets, you will be successful and you will win. That's the only way.
It only happens with the passing of time. So people have to be patient their first year or two in the business and not try and conquer, try and become a hero. And you have to be patient and let time pass, because you can't learn it. You have to live through it. So, okay. Great to have you with us. So we're all interested in your unveiling of Concord. So I never heard of it before you, so I'm sure I'm not the only one. Why don't you tell us about how how you came upon this method and what it's all about?
Okay, thank you, Dale. Thank you. I'm very glad to be here. Thanks again for your invitation. I'm very eager to contribute something to your large trading community. Maybe your community never heard before about Concord. The main reason, I think, it's because it was born on Spain. I will introduce also Javier Garcia later. He is the Concord creator.
Okay. Great.
Let we start, okay? My presentation is called a different way to approach the markets. Why different? This is a typical trader screen. We can see here the chart, the candles, and the typical indicators that most of the retail traders we use. For example, here is RSI.
Yeah.
Here is MACD. Here is stochastics. Okay, there are popular indicators. Okay, but maybe many people don't know that these indicators has 39, almost 40 years for RSI, 38 for MACD, and the stochastics has 67 years old.
Wow, those are great to know. I never thought of it in those terms. And so the market, maybe the point is, the markets are so much different than when these methods were developed at least a couple decades ago.
Yes.
A couple generations ago, really. You know, you're talking about 40 years, basically. So that's 2 generations of traders have come and gone. And a lot of them are gone.
Yes, I do not deny that these indicators works, but maybe we must ask ourselves, maybe are we giving advantage to the markets when we use these older indicators? Maybe we are fighting in a 21st century war with antiquated weapons? Maybe.
Yeah,
that could be a reason why we are not profitable on the market.
Interesting.
So this is where Javier Garcia, an Spanish information technology specialist, enters here and comes up with the brilliant idea of mixing several of these indicators into a single tool that is easy to understand visually. Javier created many indicators. We will talk today about Concord, but he has a lot of indicators. You can
by the way, I followed him on Twitter.
Yes. Please follow him.
He's not here with you today, is he? He's not on the call with you, is he?
Yes. If you can invite some of these days to Javier, will be amazing, because he's the creator. He's the Concourse creator, and you can reach him. This is the web the web page, and this is the email, no? And the Twitter username you have here on the top right. Okay.
Right. Okay. And kudos to you for sharing with us who the developer is.
Excuse me.
Congratulations to you for being transparent about who the creator of the indicator is. You know, like I didn't make up 3 drives to a top. I learned it from J.R. Hill in the 80s. So, you know, sometimes people want to make what's others theirs. And so congratulations on sharing that. Thank
you. Javier is a very good friend. I asked him about to take some of his information on his website to present to you Concord today. So I am proud to introduce Concord to all US traders, to all your large community listening. So this is Concord. This is the indicator. Concord makes 6 indicators, 4 of them for trend and 2 for volume. Dale, sorry for my English.
It's very good. Go ahead.
Sorry, please.
It's very good.
It's
better than my Spanish, okay?
Okay, its representation is based on color areas and not on simple lines like RSI or the other simple indicators I showed you before. Because the Javier things also implies a certain novelty in the design of a stock market indicators. So the brown, this is the brown area, and the red, the red is a moving average, are trend, okay? They follow the trend of the price. And the green and the blue areas shows you the volume, okay? For the calculation of the brown area, the trend, he uses an adjusted version of another property indicator for Javier. It's called Vigía. It's another indicator. He uses a small part of this indicator that is weighted and amplified indicators composed of RSI, MFI, money flow index, Bollinger Bands, and stochastics. But you can't see those indicators because he mixes. Okay? He mixes on the brown area. We're talking only from the brown area. Okay? Yes. How is it composed, the brown area?
And those are called mountains, trend mountains.
Mountains, yes. I call mountains because they are like mountains. That is the beauty of the Concord, because it has a strong and beautiful visually representation, an easy to read visual representation. Okay, so the green and the blue area are obtained from the percentage variation of the PVI, positive index, and MVI, negative volume index indicators. Anyone who reads the documentation available on these two small mathematical gems will find that they attribute negotiated volume to the strong hands or weak hands. That is the key, Dale. That's the key from this indicator.
So you want to trade with the strong hands and fade the weak hands?
Yes, that's the key. We must try to be always with the sharks, like I call. Okay. The sharks are the institutional traders, the strong hands. Okay.
Right. Okay.
In the case of Concord, the strong hands is the blue area.
Right.
Yes. And the green is the weak hands or retail traders or rookie traders. So
that's me.
That holas.
Yeah, we're all, we all say, don't, I think it's hilarious, all right? We all say fade the retail trader, but we're all retail traders. So, yes, we need to fade ourselves, right?
Yes,
do the opposite of what we would do.
Yes, we need to follow strong hands. We need to follow sharks. If they are selling, well, we are selling. If they are buying, well, we must try to buy with them. Concord can be used in several ways. Yeah, the first one is here the zero line. You can watch here the zero line. Okay. All below zero line is downward, is negative, and all above zero line is positive or upward. Okay.
Got it.
We have several ways. Concord gives you Concord gives you patterns, like candle patterns, like many candle patterns you can find, like head, shoulder, head. Also, Concord gives you mirror patterns, and the most profitable is the mirror pattern. I will explain you, okay, with an example. here you can see the retail traders are selling. They are away. They are scared. Okay, this is the green area.
Yeah, I got it.
Okay, but the blue area is up, is above zero line.
Yes.
So they are buying. The sharks, the institutional investors are buying. So the price, there is a high probability that the price at least will hold or rise. Okay?
Okay, are there any extremes or guidelines on, you know, how much retail selling, the deeper below zero, the more compelling the trade is, or are there any guidelines besides just being below it, the percentage below it, or the percentage above it for institutionals that give you even a stronger indication?
Yes. The largest is the strongest. Yes, as you can see here, you can see here that retail traders are buying here. Right. You can see my cursor, okay?
Yes, we can.
Okay. So we will explain the mirror pattern. This is only one pattern. I will explain only one pattern because we have no time. But maybe later, if you invite to Javier, he will explain a lot more of his indicator. I will explain only mirror pattern. Okay, we have here. This is my e-signal screen. I have Concord on e-signal, but e-signal has a failure. But well, not a failure. His graphic capabilities are not as good as another trading platform. So Concord looks ugly on e-signal. So sorry for that, but that's the reason why we can't watch clearly Concord here. But I will try to explain. Okay, here is a crude oil chart. Okay, you can see here, I will zoom it. This is a side.
Right.
This is a side range. Okay.
Yes.
You don't know the price will where will go up or down. Okay. We don't know. With traditional tools, we don't know. We are on a side range. Maybe it can breaks down, breaks up. We don't know. But here is very useful Concord, because Concord on the same, I will.
It will tell you what your bias should be.
Yes.
Okay.
I will zoom up this area, and you can see here that the sharks are buying, while the rookie traders, the retail traders, are selling. Okay.
Yes.
So if they are buying, they are at least holding the price, because they have a lot of money to hold the price at these levels. And then you can see the price rise, boom.
Yeah.
With traditional indicators, you can't watch that. But
no.
Concord tells you where are the strong hands, or what are the strong hands doing.
So with this software, you would never need to look at commitment of traders or sentiment indexes again, because you're getting it in real time. What's going on?
Yes, we will see.
Do you still look at commitment of traders and where the commercials and large specs and small specs are positioned, or, you know, like a DSI, what the sentiment is on it? Because I would assume if you had this, you wouldn't need those.
Yes, something like that. Yes.
Okay.
It's something like that. Yes.
Okay.
So you can see it's an amazing tool, but like many other tools, please watch carefully, because this is not the holy grail.
There isn't one. How do you manage risk? How do you manage risk using Concord? That's the most important part. So you have a signal, the sharks are long, retail short, you buy it. Is it just maybe a percentage that you're willing to risk to see if that trade pans out, or is there another technical area that you would use to place your stop loss?
Exactly. You must manage the risk. How you manage? For example, on this case, I could enter long here and take my stop loss just before this level. Okay, something like that. You must take confidence of this indicator, but maybe it can fail. So you must watch carefully what is doing the price. So this is one of my trading tools. The other one is tick chart. I will not explain here what are tick charts. Many people here before maybe explain the tick charts. I will explain my reasons for trading tick charts. Much better read on market cycles, be it trends or consolidations. The waves and price patterns are much easier to read, as during times of high trading activity, we get more bars, thus more entry opportunities. And during times of low trading activity, we get fewer to zero entries, which is exactly what we want. I don't want to be all the time with a position. I want to enter only when a trend or a consolidation pattern, I found it. Much quicker, that's another reason for trading tick chart. Much quicker entry into breakouts, because time-based charts require us to wait for the close of a bar, which could be much too late when trading breakouts. Okay. And the main reason is the moving average works terrific accurate on tick charts, like dynamic support and resistance levels. Okay?
Okay.
We will watch live trading right now. I only want you to show, I made a screenshot of crude oil 2 hours ago. I will explain something very interesting here. You can see here. Okay, I use three tick charts. It depends on the underline, but on crude oil and mini S&P 500, I use 512 ticks, like the small. The medium is 1,600 ticks, and the large one is 4,000 ticks. Okay, so we can see here that the small tick chart show me that sharks are beginning to buy. Mm-hmm. Okay, so the price stop here, stop falling, and begins to rise. Okay.
Yeah.
And the medium tick chart also is showing me that sharks are inside. Sharks are beginning to buy. They are above zero line. And also on the large tick chart, sharks are buying. So this is a strong buying signal. But you must...
Are they different time frames?
Yes, different tick chart frames.
Okay.
Remember, all are tick charts.
Okay.
Okay. I use also a 15-minute chart only for reference. Okay. But the main three charts I am using are these three. Okay. So you
What
can
time frames?
see
What time
here
frames
on the
that?
small one, 15 minutes.
Okay. Next one.
15 minutes is not shown here. The small is 512 ticks. The
Okay.
medium is 1,600 ticks, and the large is 4,000 ticks. Okay?
Okay. So it's not based on time frame, it's based on ticks.
No, only tick chart.
Yeah, the tick chart.
Yeah. You can see my e-signal trading screen.
Yeah.
Okay. So this is my I compressed many charts in one screen for you to watch. I have four screens, so maybe you can watch only the charts here small. This is because I wanted to show you what it's doing. Look at this. Look, the small tick charts are showing us that sharks are inside, are strong buying here.
Yeah.
You can see. And also, the medium tick charts are showing you that they are inside. Okay?
Yes. Okay.
Only the large one, the large tick one, this is mini S&P 500.
Yeah.
Okay?
Yeah.
Only the large one is showing that the sharks are away. But if these small charts show that sharks are inside, later or sooner, these sharks will show you here above zero line, okay? But here, there is a problem. I cannot go long because I have this moving average that is, for me, a strong resistance. So you must mix the concord signal with the support and resistance moving average to follow a trade. So maybe I cannot go long right now because I have a strong resistance here. Okay. Right. We can see here on the lower side we have crude oil. Okay, the same tick frames. Okay, 512, 1,600, and 4,000 tick chart. And you can see, let me check. I will zoom in this.
So the sharks are trying to put in some kind of low here. What
Yes.
chart? Yeah.
You can see these green dots. They are Fibonacci levels. I also use extension Fibonacci and retracement Fibonacci. This is a strong support Fibonacci level. And I watch carefully what is the price doing. Okay?
Yeah.
You see crude oil was selling.
So the sharks like trading 3 drive formations. Because you had 3 drives to a bottom. That was your 3rd drive down there. Interesting.
Yes.
So go ahead.
At this level, Dale, where sharks enter on the buy side,
yeah,
we can go long with them, okay?
Right.
Because we have a strong support level here, and
Right.
the sharks are telling you, come on, go with me, I am buying. So the price rise from these levels, and look where is it right now, okay?
Yeah. And the buying got stronger as we progressed towards today because the green levels are at a higher level than they were, say, at the first couple lows. Does that mean, I mean, can you have divergence with what the sharks are doing? Putting in a higher level than previous lows?
Yes, please, look this carefully.
Okay.
This is a moving average.
Right.
It breaks up, and right now it's not a resistance; it's a support right. line. Okay.
Right. Yeah.
So you can, if you are out of the market right now, you can enter again at this level, 44 and 14, and go long and take your stop loss here. The 5-10 ticks before, below this this moving average to enter a trade. So this is a different way to approach the markets, Dale.
I appreciate you showing us this, and I also really commend you for, I know English is your second language, and most people are afraid to address a community when they don't think their English is perfect, but I perfectly understood everything you told me today, Patricio. And I want you to understand this. You are now my trading warrior brother. I want to thank you for opening our community's eyes to something new. I think it was a pearl that you showed how many years old, and that I might, I use a lot of RSI, and it might just be a bow and arrow instead of a Kalashnikov. And wish you much success and encourage people to follow you. If you have an interest in what Patricio showed today, you could follow him at Patonet. That's at PATONET. And I hope that this visibility helped you today and that more people got to know you. I'm glad I did.
Yes. Thank you very much, Dale. You can reach me at Patonet on Twitter. This is my Twitter address. My email address also is webinarioseducativos@gmail.com. And this is my webpage where you can find almost 50 hours free financial and trading webinars in Spanish.
Yes. Okay.
Vimeo, my Vimeo channel. Okay.
Oh yeah, I went there. I saw it. Yeah. What does Webinario Seductivos mean? What does Seductivos mean?
Sorry, excuse me?
What does Webinario Seductivos? What does Seductivos mean? What's the translation?
Educativos, it's educational webinars.
Oh, okay.
Educational is educativos.
I thought you were trying to seduce people. Anyway, save that for your wife and girlfriend, right? Not for your students. Anyway, very nice meeting you, Patricio. Good hunting. And perhaps we could do this again a little bit down the road. Thank you for promoting your webinar, and nice to know you. Thank you.
Okay, thank you very much. And bye-bye to all your trading community.
Thank you. That was Patricio Coronel. You're welcome, Jack, Simon. Okay, yeah, you could tell my Spanish is really good. I know how to say cerveza. How about that? Cerveza.
Cerveza, beer, yes.
All right, Face. See you for Turnaround Tuesday. And
Thank
remember, don't just count your pips, count your blessings. I'll see everyone tomorrow. Adios. Adios, Patricio.
Thank you. Bye-bye.